On Thursday, the 27th of February of this month, the most controversial growth stock company Beyond Meat will issue the Q4 earnings for the last year 2019. And the stock made a huge move already this year. Over 50% Beyond Meat could gain this year alone in the matter of just a couple of weeks since the 1st of January. This is a huge jump. And most of it is due to great news for the company. The real question here though is Beyond Meat before or after the earnings a buy, or we should rather stand on the sidelines? All about it here in this vlog.
Wolf of Dubai.
Now, Beyond Meat is a very special company because it was the very first company on the stock market that actually developed and produced plant-based meat. Now, they are the future of meat, artificial meat. Since the IPO, they've grown hugely on the stock price. And this is actually where we will start this vlog, going into the stock. So when you bought Beyond Meat during the IPO, you was a very lucky person because since the IPO in May 2019, the stock rose then more than 250% up to around about $235 per share, and it had an initial start price of around $65. So a huge gain here in the very beginning. I believe that one of the reasons was that obviously the growth story is there with the stock. There is just the very first company on the stock market that producing and manufacturing and developing plant-based meat and actually having a huge clients. So one of them is, for example, McDonald's, belonging to the biggest customers of Beyond Meat. Now, after then the hype on the stock of Beyond Meat declined a bit, going here from $235 to around $73 per share. So we had a huge decline of 68%. This is still a little bit more than the IPO price, but you know, the hype of the stock went on the downturn and then went back up in the beginning of this year. Now if we are just looking the last couple of weeks here, for example, the 1st of or the 2nd of January, the 1st of January, you can see that the stock actually grew to 53%. This is due to the McDonald's news that there's actually two big McDonald's news. So McDonald's, the biggest restaurant chain in the world, testing Beyond Meat products in their menu in Canada, and there was the competition of Beyond Meat that actually said officially and publicly that they could not deliver for McDonald's. So you see the competition of Beyond Meat actually backed out, and they are saying that Beyond Meat with the McDonald's deal is a huge opportunity for this company, and therefore this huge spike for the stock, just unbelievably 50% increase, which values currently the stock for around $7.15 billion. So let's jump into the next topic. So if we are looking into the last earnings of Beyond Meat, we can see that actually the stock surprised a couple of times. Now, here on the official Nasdaq page, you can see that they were either on point or over-delivered on their whisper numbers or the expected earnings numbers over the last couple of quarters. So for example, here in September 2019, the earnings per share was 6 cents versus 5 cents expected. This is approximately 20% more than a positive surprise here. And even better was June 2019, which was the earnings per share $0.01 versus minus $0.08 expected. So a huge 112% surprise here on the summer quarter in June 2019. So as you can see, Beyond Meat is actually a good performer on the earnings, and that's why it's important to see for which metrics we are looking into when we are looking into the Beyond Meat stock. So the market is actually believing that the Beyond Meat company can make 1 cent per share of profit this quarter, or $76.36 million in revenue. This would compare to 6 cent profit over the last quarter and 91 or almost $92 million revenue of the last quarter. Now you can see here the market expectation is less than it was the quarter before. I believe that this can be interestingly surprising because now the test phases with so many restaurants are going on, so revenue is going there. The brand gets more and more exposed through interesting, for example, the Super Bowl had a huge ad for plant-based meat, and therefore I think the Beyond Meat should benefit also from the overall marketing or overall consumption of this new kind of meat and these options that are out there. Without saying here, the McDonald's opportunity is most probably the biggest, which we will come in a second, but also the overall knowledge about this new options on the market should push Beyond Meat revenues even further, and therefore I believe that it's quite beatable expectations here, which they did in the last couple of quarters as well. They beat the expectations, and for the overall year the Wall Street has expected a loss of 18 cents and a revenue of almost $280 million, and that's about it. So actually these expectations are in some ranges that are definitely beatable, and I believe that for example why McDonald's for example is such a huge news, because analysts are expecting that the opportunity of alone McDonald's could be a 300 million revenue expectation for Beyond Meat products, and this would be more than the annual revenue stream for Beyond Meat at this point. So you can see just with one client it is definitely possible to create more revenue for this company out there. Now, what other things that the investors are expecting? The clear path, and this is something that we see in Uber for example as well, a clear path to profitability. Now, if we are seeing that this quarter beats are on the regular basis, which we will see now with the third quarter after the IPO, then we can expect, that this should give the stock even a higher push. And out there with these new opportunities, we need to see what the company will announce in their quarter earnings for McDonald's, for Dunkin', for other companies that are currently surfing. For example, Denny's is a big fast food company, a restaurant in the US where they are also starting to use for specific brands in Canada and the US Beyond Meat products. So you can see restaurant after restaurant are developing the appetite for Beyond Meat, the artificial meat from the market leader Beyond Meat here, and therefore I can see a huge opportunity in this stock, and therefore a lot of this is now priced already into the stock already. But what does it mean, and if we should buy it before or after the earnings? Now the conclusion. Now, if we are diving into some numbers here, we have to say that Beyond Meat has already a very high valuation. So we're having a PS ratio, so the price to sales ratio of 26. This is one of the highest that I ever have seen. But obviously for such a growth companies that are just entered the market, that having very, very less competition, and where people and investors seeing huge growth opportunities, this numbers can be achieved easily. And if we are looking into the revenue growth, 200% revenue growth over the last period, we can see that this growth story is just intact or just began. So if we are looking into forward PE ratios here, we are at almost 294 to be exact. And one of my favorite metrics here, if we are looking into growth companies like that, is actually the PEG ratio. The PEG ratio is the price earnings ratio divided by the growth here. So if we divided 294 and taking in consideration the whole growth of the company, we are looking at somewhere about 1.47 PEG ratio, which is not so bad actually, considering that Peter Lynch, the very, very famous hedge fund manager of the Medallion Fund, said that he's buying companies that are just under 1, and over 1 it's declared of about a little bit overvalued, and if it has like a PEG ratio of 2-3, he's definitely not buying. So below 1 would be optimal, and just a little bit over 1, like it is here in the case of Beyond Meat, it's still acceptable. And I believe that such a growth story can have this kind of PEG ratio and can be still attractive for many investors. So I would still be on the sidelines for the earnings right here, because it can be that even with good earnings, people can start to get money off the table, just make and realize some profits over here, because the stock went up 50% just this year. So very high valuation as well, and therefore I'm waiting how it develops over the next couple of weeks. And with the earnings on the 27th of February, we will be back and review those, and also what is the guideline for their company. This is one of the most important part in earnings reports, to see how the future is being seen by the management and what is on the horizon. And therefore let's wait until the next couple of days and be back with great earnings news for this absolutely growth company.